Hey everyone, it's Steve. I just want to touch base this Sunday afternoon to go over some swing trading scans and more importantly, some swing trading stocks. As many of you are aware, I am not in any current swing trades in this market of late. Most of the charts and how I swing trade long are beaten up pretty badly. So what we're going to do today is we're going to discuss how I swing trade, not specifically the different strategies that I use. We'll save that when the market turns around and we actually get some good swing trading opportunities. We'll go into detail on the exact strategies in my playbook, but I want to go over today what I'm looking at on swing trading charts. What is a possible good swing trading looking chart for me? What isn't and why? And also, where would I place the price alert triggered at what level for that stock to get me interested in it again if the market reverses? The one thing that I was taught by Brian Shannon way back when I started trading is when stocks are declining in a bear market or a downtrending market like we're in, and they drop below most of their key moving averages on the daily chart, and they are trending down, that it's really senseless to try to guess where the bottom may be. And the reason for that is usually the first spike or two or even three, as we're seeing, is usually shorts covering. And we'll look at some examples of that shortly. So once those shorts are done covering, there is no more buying power out there, and the price of that stock will just drop back down again. So that is a very key thing that we're seeing right now. And one of the keys that Brian mentions is you need for price to confirm above several key moving averages on a daily chart before you can feel comfortable that new buyers have entered the market and it's not just shorts covering and that a possible reversal will be in place. Otherwise, the type of market we're in for swing trading long has been a recipe for lots of individuals blowing up their accounts as they keep adding on to their losing trades on every mini spike up, which simply just has been shorts covering and the price goes back down. So it's a very dangerous time to be swing trading long. And let me preface this, that investing 5 to 10 years out is not swing trading, that's investing. So we're talking about swing trading, short time frame. This is not the market to be going long. Just as a general rule, there's always will be exceptions. And that is probably one of the biggest reasons why, as far as swing trading is concerned, I've been in now for several months all cash. And I am waiting patiently, because when this market turns around, if and when, and it could be a while, it could be soon, no one knows. A lot of people think they know, but no one knows, especially in this geopolitical era of high interest rates and war and the Fed hiking rates. We don't know when that is going to happen, but when it does happen, it's going to present to us some tremendous opportunities, especially in the rooms. And trust me, you'll see me very active in swing trades, very active with me going over charts with each and every one of you. So I just simply won't force it unless I feel I have an edge. So with that being the case, let's go into some specifics. All right. Let's take a look at two stocks that has nothing to do with what I'm talking about, but two stocks that I want to bring you up to speed on, and that's Mara and Riot. And let's take a look at Mara. Right. Mara and Riot are Bitcoin mining companies, operations. They have Bitcoin mining rigs. In the past, their price has been trending with that of Bitcoin. You do see that along with Bitcoin, but their price has been for Mara tanking, and it is somewhat still trending down. Now, the new regulations or pending regulations that the United States says they want to regulate Bitcoin. Came out, was a pleasant surprise. They were very Bitcoin friendly, crypto friendly. However, there was a point in there talking about carbon tax credit. And right now, Mara and Riot have been enjoying them. And with that possibly going away, Mara and Riot for a long-term swing trade might not necessarily go with Bitcoin the way it has in the past. So just keep that in the back of the mind that, smart individuals, and Kevin O'Leary, I believe, even mentioned it, that he was exiting all of his Mara and all of his Riot positions, not because he doesn't believe in Bitcoin or cryptocurrency. He totally believes in it. Just that this carbon credit issue may affect Mara and Riot if it comes to pass. So I just wanted to share with you those two charts. Mara and Riot both been beaten up. So it's going to take a lot for them to start moving. Probably going to have to get past that carbon credit issue. And again, it's all regulations that is pending. Nothing's etched in stone. I just did want to share with you that a lot of individuals, such as Kevin O'Leary, whether you like him or you don't like him, he's a sharp investor, are very aware of what's going on here. So let's jump right into looking at swing trading stocks. CNQ, which was referred to me in the room by Lucia, all right, I believe she worked for the company way back when, but as you're looking at it, it's a Canadian energy company that has been swinging up and riding up the 9 EMA. This actually has been an excellent swing trade going back now into December, probably mid-December, where it started its move up. And if you notice, it's been using the 10 EMA. We use the 10 EMA on the daily chart and the 20 EMA on the daily chart. The maroon is the 50 SMA and the 200 moving average is the blue. But notice it's been using both the 10 and mostly the 20 as support, but has been riding up smoothly. Now, this is a type of stock that I'm looking. These are my 4 key moving averages that I use on the daily chart. All right. One, I ask myself, is the stock trending up? All right. And the answer is yes. And it's trending up in a down market. So it's an alpha stock moving on its own. Right. That's a positive because I like to go long on swing trades that are trending up. I also like to go long on swing trades that are above their moving averages. Doesn't necessarily have to be above all 4, but I definitely like to see them above at least 2 out of the 4 key moving averages that I use. And that was something that was taught to me by Brian Shannon. Now, whether you use different moving averages or not, that's not the point. If you're using different moving averages, they work for you and what you're looking at, but price should be above at least 2 of your key moving averages on a daily chart in an uptrending chart. So for the CNQ, I'd be totally bullish on this stock, definitely above the 20 SMA. All right. You can even have a tighter stop and say right below the 10 EMA if you want. But notice in the past, it's been using the 20 as support. All right. Now, where would I enter it? If I'm not in it, if I'm in the stock, I'm staying in the stock. My stop would probably be below the 20 SMA. I like this stock a lot. But if I was looking to get into it, I probably set a price alert for that recent high, as you see. And see if it wants to take out that recent high. And if it wants to take out that recent high, it could definitely have a continuation. Very well might pull back. And if it does pull back, I'd be very interested in this stock if it pulls back close to 20 SMA on another bounce. Now, I wouldn't guess that it's going to bounce. I would wait for a green candle if it pulled back to the 20 SMA like it did here and let it bounce, and then I would enter. We don't guess, we confirm. So on a pullback, you don't want to guess it's going to bounce. You wait till it confirms that it's going to bounce. So that's how I would look at CNQ. It's actually a good looking chart out there. And let's take a look at another stock that's been moving. It's been trending up, and that is United Steel Corp. As you can see also, United Steel Corp has been trending up and is above all four of its moving averages. Trending up, right? So why wouldn't I like this stock as a possible long now? It's actually spiking so far ahead of the 20 SMA and the 10 EMA, 20 EMA and 10 EMA, all right, that I would be more comfortable for a pullback like you've seen it's done here and you've seen it's done here. In the past, when it's broken away from the 10 EMA, it has pulled back somewhat. So for me, I wouldn't want to chase right now and enter it at a break of the high of the day from Friday. I would set a price alert for a pullback. My trade idea software lets me set a price alert for a pullback that if it pulls back now, I will be alerted on that pullback. So I'll put that pullback around that area. And by then, if it pulls back, all right, the 10 EMA could be catching up to it. It could possibly be a good entry point. But for right now, I would not chase it. I wait for the pullback. And at the time of the pullback, I decide how I want to handle it. So the concept here is, although it's trending up, and we like that if we're going long in the swing trade, and it's above all four of our moving averages, we like that again. Okay, all right. The fact that it is so far away from that moving average would make me a little leery going long. Now, some folks might say, well, listen, you have a possible golden cross happening here. Very, very bullish move where the 50 goes above the 200-day moving average, the 50 maroon, the 200's blue. However, you have to keep in mind here that the 200 really has been consolidated. This I would call a half-ass golden cross. It could spike it more. There's no question about it, but it isn't the type of golden cross where we have a trend up strongly coming from the 50-day moving average. Hopefully that makes sense. Let's take a look at PayPal. So you know, all of these are that we're looking at are coming off this scan, which is called my like scan. My like scans have been stocks that I've traded in the past, either day trading or swing trading, that move with the markets, tend to be. So these have been very active stocks that move. So I do add to it, I do take some off, but we are looking at some from here. So let's look at PayPal. Now, PayPal will be a different example, okay? PayPal will be an example of a stock that is getting the shit kicked out of it, okay? Not only going down, but gap down. It's just going down. Now, those looking or hoping or guessing for the bottom might say, well, it looks like we might have found some support at this area where accumulation could be taking place. Possibly, because that is often a sign. But didn't we see the same thing here? And it continued down. Didn't we see the same thing here? And it continued down. All right, so for all those folks that thought they were getting in at the bottom here, 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 and here, look where they are now. All right, so we need not to guess or hope, we need confirmation. So how do we confirm? Number one, is the stock trending up? Nope, it's trending down. All right, so right there, we need something positive to tell us if we want to get in long on this stock right now. Next question you might ask yourself is it above or below its key moving averages? Right now, it's below all of its key moving averages. All right, so for me, I would not even want to look at this chart until it was above at least two of my key moving averages. So this being the 10, this being the 20, I would set a price alert right above the 20. So price would now get above those two key moving averages. All right. Doesn't mean I would enter it there. It means I would take a look at it. All right. Because it's very possible it could just be shorts covering and will come right back down from the 20 EMA. Now, if it breaks through the 20 EMA and starts heading towards the 50, which is right here, is very possible that's new buyers coming in. So how I look at this stock is I don't like it now. I don't even like it too much above those two moving averages, but I'll take a look at it if it gets above. So hopefully that makes sense and you guys are following me. All right. Now, this isn't a strategy. This is how I'm looking at these stocks. Like I mentioned to you, when the market turns around and some of these charts look cleaner, I will go into detail and do another video on my swing trading strategies. What I am showing you are concepts that's in Brian Shannon's book. All right. The JC Parrots talks about this also. It's just how you want confirmation. And let's think about that for a second. Knowing that PayPal, and I'm not saying PayPal's ever going to get up to $300 again, but knowing that PayPal was at $300, right? Do we really need to guess in and get in early at $95? Do we really need? Can't we wait and confirm till it's say 150? Do we really need that? If it's really gonna, you believe in a stock and it's really gonna get back up to 300 again, do we really need to get in it at 95, 100? Isn't it better to wait for 125, 150 to confirm it? And that's the type of thinking you need to get your mind in. Now let's take a look at another fan favorite. And this one, Palantir, has been a tale of two cities for me. One, I made a lot of money on Palantir. Summer of last year, I went from, I think, $20 to 27. I enjoyed it, but I also bought some more and held on to some when it dropped down all the way to 18. I did make money on it. I did lose some money on it. Thank God I got out of it. All right. Because Palantir, for whatever reasons, and we can discuss all those reasons, all right, has just been going down. Now, Palantir, let's look at it. Trend has been down. All right. We like to see the trend up. So regardless how you feel about this stock, let's just talk about it like it was a different company. It doesn't matter. We're just looking at the chart. Is it above or below all of its moving averages? Well, if you look at it now, it's actually starting to consolidate above or right at the 10 EMA and the 20 EMA. It's like, whoa, that's a little bit different than when we were looking at the stock before. PayPal, right? PayPal, right? It was way below. PayPal, the price was here compared to where the moving average is. We also see consolidation. So let's look left on our chart to see what it's done in the past. All right. And in the past, it's rejected. In the past, it's rejected. In the past, after consolidation, even at these moving averages, it's rejected. It seems like it's riding down the 9 and the 20. Right. So we have to keep that in the back of our mind that this consolidation we might feel is accumulation, but it's shown that same consolidation in the past, only to continue back down. And again, obviously, someone's, a lot of papers exiting a position, whatever that reason is, really doesn't matter to us right now if we're just following what the chart's doing, because the chart's telling us everything. So for Palantir, again, we like to see Palantir get above the 10, above the 20 EMA for possibly moving and confirming that the price now is going to start coming back up. All right, because in the past, it could not get above those areas. Now, you have to understand Palantir is a growth stock. Growth stock is very much tied in with the interest rates and the 10-year treasury yield. All right, growth stocks, investors are looking at future revenue from this stock, not present revenue. So if an investor can get a better return on their investment by placing their money somewhere else, now they will, because they now know that Palantir is not going to give them revenue right now. 5 years from now, they may, but they don't want to tie up their money in a stock that's doing nothing. And that's why you see a lot of growth stocks get beaten up now. People simply don't want to keep their money. Stocks not that are not only going down, but are doing nothing, especially when they have opportunities to invest that same money in a better producing asset class, even if it's a treasury yield that's only paying out, say, 2%. So keep that in your back of your mind. If Palantir is going to go with the Qs, If the Qs go up, Palantir is going to go up. All right. But even if the Qs go up, you want to see this confirmation above those moving averages. All right. So for the case of Palantir, since the 50-day moving averages is so close, I probably want to see it get above the 50-day moving average before it gets me excited again. And that would probably be around $14. So if Palantir gets above $14, it's a nice move, $2.50, $3. Okay, it's going to look pretty good right now. All right, for me to consider possibly entering Palantir again. All right, notice I am not guessing. All right, only because it could have another leg down. You simply do not know, especially in the type of market we're in that is so news driven. I mean, the war, affects inflation rates. Inflation rates infect, and what the interest rate hikes are going to be. Will more be added? All right. Will the rate hikes be 50 basis points and not 25 basis points? So all this geopolitical news affects so many different aspects. So it's just not that cut and dry. So I set a price alert not to enter it. I set a price alert to alert me that maybe it's time to look at this stock again. And then if the situation market is different and we're starting to get back in a bullish type market, uptrend market, and Palantir alerts at 14, I very well might consider entering it or move up to 200. Hopefully, guys, I'm making sense on all of this. Let's take a couple of looks at another decent popular stock, DraftKings. DraftKings, holy crap, what the hell is going on with DraftKings? All right, DraftKings is trending down below all four of its moving averages. Some will say, well, since last earning, it's forming a double bottom here and could pop up. Could, right? Could just be short covering, because shorts also see a double bottom, right? And shorts might be saying, I'm getting out now, right? And we get a spike up only for it to come back down because there's no new buyers. What the situation with DraftKings is real simple. I think everyone realizes the sports gambling, okay, is extremely popular and growing across the United States. And you have so many players in this marketplace right now, whether it be MGM, whether it be Penn, whether it be Wynn. There's just so many players out there that they're all competing for the customer. They're all competing for Ray, since Ray's a sports bettor, right? So they're spending lots of money on customer acquisition costs. So they are spending more dollars to acquire a customer than they're getting back in profit from that customer. And that is being reflected in their earnings. So not just DraftKings, but other companies, but specifically DraftKings. Now, a lot of these companies are okay with that. They're okay with burning through money to capture the customer because they feel if they capture the customer, they'll have that customer for life. All right. Obviously, the early insiders with stocks, that invested in DraftKings pre-SPAC IPO, and actually was a SPAC, not an IPO. All right. They're like, that's all fine and dandy, but I invested 10, 20, 30 million pre-SPAC in this company. I want to get some profits out of it. And you see the paper being sold off. They're not doing anything illegal because they put up that money way back when, before this company became a direct listing. They have every right to get a return on their investment. All right. But where are the new buyers as they're selling off? The new buyers just are not there, and they're not there because of that customer acquisition. So that is something to keep in your back of your mind about, well, DraftKings is really good. We have the season coming up. That's all fine and dandy. Look at their customer acquisition cost. That's going to be the key metrics that Wall Street's going to be looking at. But besides that, price will tell us that, right? We don't need to know what I just said, because once price starts going up, and in the case of DraftKings, above the 50 moving average, why the 50? I always say at least two, because sometimes three, because they're all bunched together. Let me see it above the 50. That will start telling me things are improving, at least how Wall Street is viewing the company, beyond just short covering. So it's nice to know the news so you understand why the stock's doing what it's doing. All right. No, it's not manipulation. Everyone thinks everything's manipulation when the stock goes down. If they understood the macro behind it, all right, the early VCs behind it, they might understand what exactly is happening with the price being moved. So let price tell you things are starting to change. right, in the companies from a financial standpoint. What else? Let's see. We'll do one more. Tesla. And again, this video was not to give you great looking swing trades, although the first one we looked at, CNQ, you might want to take a look at CNQ. That could be a really good one, all right, that will run on us. So if you're looking to play a swing trade long, replay this video and go back to the CNQ part. That might be one you want to look at. But the point of this video is to understand the concept, what I'm looking at way before I even consider a stop. So let's look at Tesla on a daily. Oh, Tesla, what an ugly chart. Ugly, 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 ugly. Boom, 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 boom. Going down. Now, I don't care whether you believe in Tesla, you don't believe in Tesla, you like Elon Musk, you don't like Elon Musk. What is the chart telling us? The chart's telling us it's an ugly mess going down. Okay, it is below all of its key moving averages, including the 200. All right, but they're also bunched up. Tesla, as much as I may believe in the long-term future of Tesla got to get above just these moving averages where my purse is moving. It's for me to even possibly consider it is going to have to get above the 50. Okay, I don't want to know the small stuff because you look left, you see all this congestion. Get above here, and then I'm going to have to, if the price alerts at 964, the Qs have probably been going up, right? Because Tesla's also going to move with Qs. Tesla's a growth stock. Everything I said about Palantir will hold true for Tesla. Okay, but if price gets up that much, which is about $150 from where it is right now, there's a very good chance the market is going to be rebounding. All right, inflation fears are settling down. The interest rate hikes will remain at the 6 or 6.5 that they're forecasting it to be at 25 basis points. So price will tell us that things are settling down from a macro point of view. All right, so until then, I have simply no interest in Tesla. Now, folks are gonna, right? Once it spikes up a little bit, could be short covering. Everyone's going to say, I'm getting in Tesla now. Tesla's going to get back up to 1200, which I'm sure one day it will. All right. But it could simply be short covering and come right back down again. We've seen it all along, right? We've seen the spike ups, consolidation comes back down. So I want everyone to understand from a conceptual standpoint, ask yourself, is the stock trending up or down? If it's trending down, you have to ask yourself, is it above or below all of its moving averages? Obviously, most likely it's going to be below all those moving averages. And then the next key question you have to ask yourself, am I going to guess the bottom, or I'm going to wait for it to get above some key moving averages? And that confirming to me it is more than just short covering, because the first bullish move, and it's not even bullish, the first spike or two or three on a downtrending stock will be shorts covering. And you have to ask yourself, if you own that stock and you were shorting it, you were shorting that stock for months, and it started to consolidate or go up or hit support, what would you do if you've been shorting it? What you would do, you would cover your short and take your profits. And by covering your shorts, you're buying it and the price will go up. Always put yourself in the shoe. What would you be doing if you held a stock for the past 3 months? What would you be doing now? All right, because a lot of times that's a lot different than what buyers are doing it. So always ask yourself, okay, if I owned it, what would I be doing? And a lot of times that's exactly what smart money would be doing at the same time. But hopefully, guys, this helped from a conceptual standpoint. This week, you can ask me any question, tag me in the rooms on swing trades. I do not mind looking over charts. It's just that I'm saying the same thing over and over again until these things start moving. But when these markets move, guys, and I remember after COVID in March of 2020, whenever COVID was, right, that next 3 or 4 months, I made the most money ever swing trading. From that April to June, July was just simply insane. An example, I remember Penn. I got in at Penn at $12. It went from $6 to $12 Penn. When I got in at 12, I thought I was chasing it. All right, that I had FOMO. Penn wound up going from 12 all the way up to 115 before I started slowly selling it off, or it went back down. And there was others just like that. The airlines, car rental companies, Avis. There's going to be opportunities, right? So don't blow your money now feeling that you have to get in a swing trade long going against the tide. And as always, 3 out of 4 stocks will go with the momentum of the market. So if the market's going up, 3 out of 4 stocks will be going up. Market's going down, 3 out of 4 stocks will be going down. And now fourth stock is an alpha stock moving on its own, usually with an extreme strong catalyst. So just make sure the chart is supporting that catalyst. So that being said, if you need anything, let me know. Enjoy your Sunday. Make sure you check out the room. You're probably listening to this probably way past Sunday afternoon, but whenever you're listening to it, there is some very good posts, not only in the micros room, but in the equities live trading desk room from Sunday afternoon. So you might want to scroll back to Sunday afternoon and read through them. But any questions you have on swing trading, let me know. Day trading simply doesn't matter. We'll take it from there. If you don't mind liking this video, if it's appearing on YouTube, and subscribing to our YouTube channel, that would mean a lot. It will help with the algorithms on YouTube. And if you have any positive comments, feel free to put positive comments, even if it's just a shout out hello. If you have any negative comments, don't even bother putting them. I'll just delete them on you. So, okay, guys, have yourself a really good rest of Sunday.